Have you ever felt like the stock market is some kind of exclusive club, like you're not on the guest list? Well, we're about to change all that. In the next few minutes, I'm going to walk you through exactly how to buy your first share. And trust me, it's way more straightforward than you think.
I mean, we've all heard this one before, haven't we? This idea that investing is super complicated, that it's just for financial gurus in suits. It's a huge myth. And honestly, it's probably the biggest thing that stops people from even trying. It makes you think, nah, that's not for me.
But here's the thing, that idea is completely outdated. Seriously, technology has totally changed the game. Those intimidating walls of Wall Street, they've basically been knocked down and replaced with simple apps you can get on your phone. The power to invest is, no joke, right there in the palm of your hand. Okay, so before we get into the nuts and bolts of how to do it, let's just quickly break down what we're even talking about. Getting a handle on these two basic ideas is key to everything else, and I promise it's not complicated at all.
All right, first up, what even is a share? It's not just some random number floating around on a screen. Think of it like this. When you buy a share, you're buying a tiny, tiny slice of a real company. You literally become a part owner. And the cool part is if that company does well, the value of your little slice can grow right along with it.
So where do you get these shares? That's what the stock market is for. The easiest way to think about it is like a giant online marketplace, kind of like an eBay or an Amazon. But instead of buying gadgets, you're buying and selling pieces of companies. It's simply the place that connects all the buyers and sellers. Okay, so now that we've got the lingo down, let's get to the fun part, the actual how-to. Getting yourself set up to invest really just comes down to 3 simple steps. Let's break them down.
Here they are. First, you gotta choose a broker. Second, you open an account. And third, you add some funds. That's it. Let's dig into what each of those means. So that first step, choosing a broker, is a pretty big deal. A broker is just the company that gives you access to the stock market. You'll want to look at stuff like their fees for sure, but don't forget to check out what kind of features they offer, and really importantly, how easy their app or website is to use. You want something that feels intuitive, you know? Think of them as your gateway to investing, so picking one you like is crucial. Now, opening the account itself is usually super easy. It's all done online. You'll have to do this thing called KYC, which stands for Know Your Customer. Sounds official, but really it's just them verifying who you are, usually with a photo ID. Once that's done, you're ready to add some money. And seriously, my biggest piece of advice here is to start small. Just put in an amount you're totally comfortable with while you're getting the hang of things.
All right, deep breath. Your account is open, it's funded. Now we're at the really exciting moment. It's time to actually place your first order and officially become an investor. This is it. But hold on, before you smash that buy button, there's one absolutely crucial step: research. This isn't gambling or throwing a dart at a board. It's about knowing what you're buying into. You want to look into the company's health. Are they making money? Are they growing? The good news is, most brokers give you a ton of tools and reports to help you figure this stuff out. Okay, so when you're ready to buy, you're going to see 2 main choices: a market order or a limit order. A market order is all about speed. You're basically saying, just get me the shares right now at the best available price. A limit order, on the other hand, is about control. You say, I only want to buy if the price drops to this specific number or less. So one is for speed, the other is for price control. And that's basically it. You've done the research, you've picked your order type. Now you just punch in how many shares you want, click confirm, and boom, it's done. Just like that, you are an investor. Seriously, congratulations.
Okay, buying that first share is an awesome feeling, a huge milestone. But it's really just step 1. Because successful investing isn't a single action, it's a long-term journey. So let's zoom out a bit and talk about what comes next.
One of the absolute key ideas for long-term success is something called diversification. You've definitely heard the saying, don't put all your eggs in one basket, right? Well, that's literally all this is. Instead of betting everything on one company or one industry, you spread your money out across different areas, like tech, healthcare, whatever. That way, if one part of your portfolio has a rough year, the others can help balance it out.
So why go through all this trouble? What are the potential rewards? Well, for one, over the long run, the stock market has historically delivered much higher returns than just letting your cash sit in a savings account. Plus, some companies pay you just for owning their shares. That's called a dividend. And you get to be an owner in companies you genuinely admire and believe in.
Now, we've got to be real here. There are risks. Share prices don't just go up, they go down too. And yes, you could lose money. But the key is to not be scared of risk, but to learn how to manage it. And how do you do that? with the two most powerful tools an investor has: solid research and a whole lot of patience. So as we wrap this up, let me leave you with 4 little tips for the road. First, never stop learning. Stay curious. Second, try your best to ignore the hype and the panic. Make your decisions based on facts, not fear. Third, think long term. This isn't a get-rich-quick scheme, it's a marathon. And finally, number 4, be consistent. Investing a little bit regularly is so much more powerful than you think. It's how you build real wealth over time.
And there you have it. That's the blueprint. Step by step, no more mystery. The path to buying your first share is right there in front of you. So really, there's only one question left to ask. What's your first investment going to be?